Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're now on Tuesday, the 25th of March, 2025, just getting after 6:25 p.m. Central Time. Well, the gold market tonight down 30 cents. It tried to rally today, and for a while there, I was wondering, was it going to be able to re-embed, and it did not. So now you've got 2 days in a row where you've lost what we call the bullish embedded reading. So the market is now, on my work, overbought. Ideally, it gets a pullback to the closest moving average. It doesn't have to do it. It's not an out-and-out sell signal, but it's an absolute loss of upside momentum if you're a momentum trader, which makes sense. Which way are you going to go off the tariffs? Are they going to be less inflationary than the market is thinking here? And that's why one of the reasons gold went up, or backing off. One of the markets that's fighting that is copper. Copper is just saying these tariffs are going to bite and bite hard. And here you are pushing $5.25 a pound. You do realize at that price, if you're on a construction site, you better have something to lock down your copper wire. People are going to be grabbing it. You know, we've seen times where they steal traffic lights, anything they can get their hands on for the copper, because the scrap is worth quite a bit of money right now. I'm not saying to go do that. I'm saying I'm used to this happening. On the energies, we got the API numbers came out, and after the market is when they always do that. And to me, they were friendly in all categories. You're getting a little bit of a bid, but the Houthis again attacked U.S. ships today, and they fired at Israel's airport. I haven't heard if any of the missiles got through. I imagine we would have heard that, so I'm assuming that the defenses struck it down. This wasn't a 1-2 attack. I understand it went on for hours. So apparently we're going to have to ratchet it up, we being the United States, and go in and take out and do even a lot more damage. And, you know, they have sophisticated missiles. So as President Trump said today, it's going to be an event. You saw that, you know, the president of the Atlantic, or I guess the publisher of the Atlantic, he got an invite to one of those meetings by accident. Somebody's head should roll. I doubt that it'll be Waltz. It's probably Hegseth that they'll go after. He's the easier target, I think. President defended today, Waltz, if you were watching the press conference, for all the ambassadors that are now going before the Senate for confirmation. Bonds and notes, you're still dropping a little bit. Yields are stubborn. They're back over 4.3 in the 10-year note and pushing over the 4% level in the 2-year. So in terms of the news of the day, let's go there. You're going to get the Mortgage Bankers Association numbers in the morning. We'll see how people reacted to the past week of falling rates, or gradually coming. I think the rates actually went up a little bit in the past week or so. We're then, and remember, that's a weekly report. On the Wednesday, we're going to also get the monthly advanced durable goods. Now, I don't know if people are going out and buying big ticket items or not. You know, I know what's happening in copper, and I know that's going to get reflected in items that use a lot of copper. So it's something you want to take into consideration. Plus, anything that gets tariffed, you know, you want a refrigerator, you want a washing machine. If it's not made in America, you have a problem coming. They're looking for this to be off 1%. That compares with January's gain of 3.1. It comes out at 730. Now, something else that you should look at, I wanted to put together a list for you of the countries that have the largest debt, tariff debt, with the United States. It's obviously China. The European Union is right there. Mexico is right there. You know, you've got all the different countries. You can hit pause here to see which ones they're at. There's also countries, in all fairness, that we tariff and hurt. And that's why the number goes from 0 and swings around on you. So will the reciprocal work that way? Who the heck knows? I can't begin to tell you that, and I don't know that anybody can. When we look at the gold market, you're up for the week. 0.13%, up $3.90. When we take a look at the action, you have fallen off the peak from last week, and you're consolidating. When we get further into it, you still have the pattern of higher lows, but now you might end up with a lower high. We don't know yet. You had this happen, unless you have an inside day or take out this low. If you were to take out the high of today, you could still take that out and keep the move to the upside going. If the market decides to break, one of the support zones could be the 29.76 level. It's about $50 an ounce lower. It is the 18-day average of closes. What stopped the rally was it was running against the upper Bollinger Band. We had what I call that gorilla glue trade. And when you came away the first day where you didn't hit the number anymore, that said, that pressure's off the market. And now you've lost the embedded reading with these readings, the lead red number, the K line, under 80 for 2 sessions in a row on closes. Before you make a new high, it often implies the price and the 18-day average are going to come together. It's normally by them both making a run at each other. I don't know what will happen here because tariffs are something different. We had gotten over, and if you'll recall, I was telling you over the weekend, we're back to numbers here that are a resistance area of gold, silver. And now silver has gained a little bit back on the gold market. You even see that here. While the gold market is consolidating, this market's bouncing away from its 18-day average, but it is not in a trend. It has a higher high, lower low. We see the support. It fought for that before, and it's logical. Now, the market that's still running is the copper. And as long as this number stays like that, it is strong. But warning sign. Like the gold, you had your gorilla glue trade and you've stepped away from it. Unless it goes up and hits it again, which it hasn't done, it is a sign that internally, even though it's gaining, the momentum is starting to wane a bit. And yes, it is gaining, but you've got to keep your eye on that. And there's nothing you're hearing me say that I'm bearish on. I will tell you that if you lose the embedded reading after that size run, wherever the 18-day ends up, that'll be one of the targets that I would have for support. The platinum, once it got into that 18-day average 3 days ago, died. I mean, it's literally just gone, I'm sleeping. I don't know what to do. And that's where you're at with a higher high and lower low. And in the dollar, I expect that this is your resistance zone. We had a bear market rally. The market hasn't proven yet that it can stay over and mount anything over the 18-day average. Was that the rally? We're going to find out very soon. Obviously, things working against the dollar are consumer sentiment. If you're watching the numbers that are coming out, University of Michigan, today's U.S. consumer sentiment numbers, they're terrible. Were you looking today to see the Philly Fed manufacturing numbers and or the Richmond? Right in the toilet. It's a difficult time. If you're a company, do I go ahead and do anything? Those that had to bring material in because of tariffs have probably done it. There's still ships coming in. We don't know when the president's orders will take effect, the day that they do. But now people are sitting back and waiting for orders to come in, and the public is uncertain because will tariffs slow our economy down? What's it going to do for jobs? Nobody's quite certain. Uncertainty doesn't breed good markets. But if you're a trader and you use TradingView, you can get all my indicators in it. And I mean all of them. We've put together a suite of indicators that include my swing lines, window envelopes. I even include outside days, Bollinger Bands, and my version of slow stochastics. It takes up 2 slots. If you're a user, you understand what that is. It leaves you plenty of your slots open. You can turn on and off any one of the indicators. You can modify them, and away you go. And how you do it is you go to our website at iraepstein.com, go up to Client Resources on the top right, and at that area you sign up. When you're through, we'll get an email. We have to turn it on from our side. Once we do that, you will get an email that it's turned on. Just log out of your TradingView, back in, go to your indicators, and boom. They're all set, ready to go. So it's pretty simple. We've had a lot of people do this. I think you'll like what you see. It's iraepstein.com if you're using TradingView, and go up there into the top right, Client Resources. I'm Ira. Catch up with you in the morning. Take care.